Welcome, everyone, to our monthly governance call. Usually, at this time, I would start off with a dad joke, but I have something much better for you today. And that is that last year, MakerDAO, or also called SkyNow, they announced their Spark Tokenization Grand Prix, where they were to allocate $1 billion worth of reserve assets into tokenized real-world assets. And in September last year, Centrifuge, together with Anemoy and Janus Henderson investors, they submitted the application on the Sky Forum, and you probably know where this is going. And yesterday, it was announced that Centrifuge is one of three winners in that tokenization Grand Prix. So more specifically, it means $200 million worth of reserve assets that are going to be invested in Centrifuge treasury products. And the two other winners are BlackRock and Superstate. So all the allocation goes into tokenized treasury products. And this is a big thing, not just for Centrifuge, but also for the whole tokenized market, because if I'm not wrong, like the whole tokenized US Treasury bill market is like around $4.55 billion right now. So this is a significant boost to there. So we are going in the right direction. So take a moment to celebrate, everyone, and well done to especially Janus Henderson, Anemoy, and all of us, basically. So I thought let's start with a good announcement, and then we can move on to the agenda. So as for the governance update, we have two proposals live on the forum right now. And as you can see up here, that's CP149 and CP155. So a little background to CP149, that is a follow-up proposal to CP141 that we had on the agenda in last month's call. And that was to initiate the development of Centrifuge V3, so to make it an EVM-based protocol. And that one passed the token holder vote. So this is a follow-up proposal for the token migration. And we're going to hear about that in a moment. And then the other one, CP155, is a treasury proposal to the Centrifuge DAO for ADE to develop a tokenization platform. And we have the authors with us in the call as well, so they will present it too. So there will be time to comment and ask questions for both proposals. So that's it for the call. So let's jump straight into CP149, the migration of the Centrifuge Governance token to EVM. So who will kick this off? Will it be Jeroen or Baji? Who will start with this one?
Yeah, I can give an introduction. I think the goal would mainly be to have a discussion or any kind of questions and leave time for that. But I can start and summarize it. But yeah, kind of on behalf of other people here, also Bashi and Neil, Graham is here, Martin is here, a bunch of people that have contributed to this. But yeah, I mean, first off, I think what's important to say, this is kind of a follow-up proposal to CP141, which was the launch or the planned development of Centrifuge V3, which I think is a really big step for us, right? Like we're moving to a fully EVM protocol, deploying on different EVM networks. And I think that's going to bring a lot of new users and partnerships for Centrifuge more widely. As part of that, the proposal is then to also migrate the CFG token to Ethereum. Currently, we have Centrifuge natively on Centrifuge chain, and that's the primary place where it's issued. And then there is wrapped CFG on Ethereum mainnet as well. The goal and the proposal here is to launch a new token on Ethereum that will basically unify these different tokens and create a single token that people can trade, use, and build on. It also, I think, by launching this new token, we also can kind of reinvigorate the token. We can make governance a lot easier, hopefully, with all of the governance tooling that's available on the EVM. And then we can start using that to build more utility for CFG, which I think is something that all of us want. As part of the proposal, we've also outlined what the migration would look like. So the KF team has been planning the kind of technical part of this. And the way it's looking is we'll be able to offer a user interface within the Centrifuge app that allows both holders of wrapped CFG on Ethereum as well as CFG holders on Centrifuge chain to basically wrap their tokens and burn them and receive newly minted CFG tokens, the new CFG. This we're aiming to launch if the proposal process pretty soon. I would say sometime in April, and then the migration will be open. I think we put until the end of November this year. So that's really give plenty of time for any token holder to migrate their balance and to receive the new token. Yeah, that's basically it. There's some more details in the proposal. I'm sure everybody has already read this. So yeah, I'll leave it there and see if there's any questions.
I can just mention that there is an ongoing off-chain vote live right now for this proposal, and it's going until tomorrow, so there's still time to vote on it. Wanted to mention that early on, but forgot, so just wanted to add that. Otherwise, questions, comment on the token migration proposal? There are some in the questions in the chat. There's one saying, could you provide some more content to the 115 million CFG being minted and some details around arriving at that number? And it says also, wouldn't it be a good opportunity to mint more if already minting to make a bigger impact?
Yeah, so I can jump in on that one. The reason we arrived at that 115 number is that we did want to be very sensitive to dilution. So that gets us at a 20% dilution from the current CFG supply. And as we thought about what to do with those tokens, we're really thinking in terms of supporting the migration for exchanges, for market maker relationships we have, ensuring that there's great liquidity and volume for the token when we do the migration. And then giving ourselves opportunity to have more of a reserve for strategic alignment within the ecosystem to drive incentives for the long-term behavior we want to see for potential RWA partners and holders of CFG. So the kind of considerations of what went into that decision were what specific areas do we think we could use those tokens for? How will it drive the right behavior? And then how can we be as mindful as possible with our current CFG token holders and the current outstanding supply to minimize the dilution and the impact on those current holders? We tried to kind of plan it out in a way where we don't expect to have to do another mint in the future. So we hope that this 115 will get us to a point where we can drive these relationships and strategies forward and sustain off of the current tokens that we have and just focus on growing the utility and the use of them across the ecosystem more broadly.
Thank you, Baji. There's also one from Jay. You want to ask that one yourself, Jay?
Will there be any cost for migrating tokens through the bridge?
Yeah, so for wrapped CFG, it will be minimal. For CFG on Centrifuge chain, there are some costs. But the way we designed it, we definitely optimized for low costs. So one of the so basically the reason we're not using existing Polkadot bridges because they're actually quite expensive. Like Snowbridge, for example, is like the per transaction cost is pretty high. Even though I think technically it would have been a quite simple solution. So instead, we're basically reusing the system we already have for vaults, and that's pretty optimized for cost already. So I don't have a like specific number, but I think it's like $10 to $20 at current ETH gas prices. But obviously, it will depend on the gas prices. So if you're doing it while there's an NFT dropping on Ethereum mainnet, I don't know if it still happens, but if it does, you're going to pay more. But yeah, if you watch ETH gas prices, that should be pretty affordable.
Ryan, go ahead.
So I guess a follow-up question then, just based on what you were saying, Jerome, like with as like a token holder, would then when I do my claim, be responsible for the individual gas for the swap at that point as well?
Yes, you are the user that's swapping, especially paying the fee. I think it's a minimal fee, so I think it's acceptable, but yes.
Okay, the other, I guess, follow-up question then, and to your point, just someone who monitors gas, for instance, like Sunday morning in East Coast of America, for instance, Gwei is typically very low, and I did appreciate the NFT joke. The other thing I was going to ask, and I know I mentioned this to Baji, and or sure to put me in touch with Julia. Are you guys thinking about any potential custody solutions for the rest of the token supply after the fact? Because I was going to make an introduction to Ledger Enterprise, and I figured that just really dovetails nicely with sort of the Centrifuge brand and being a dominant player in the space. Obviously there's other custody solutions that you guys may be thinking about or talking to as well. So just curious about that.
Yeah, I think we're talking to a bunch of different custody providers. I think we're talking to, I mean, all of the big names and trying to get them to support the new token as soon as possible, and then also use that for our own purposes. I don't know if
Definitely, yeah.
anything
It'd be good to set the introduction up. That'd be helpful. We really appreciate that conversation. But as Euro mentioned, we're in conversations with maybe 5 or 6 different custodians, and figuring out which partner we go with.
Ash, you had a question in the chat as well. You want to ask that one yourself?
Sure. Can you guys hear me?
Yes.
Yeah, I just thought that we already established these relationships with market makers in the past, and part of the dilution is upon that. And I was just wondering if, because we established these relationships before, could they just not migrate the tokens that they've already received?
I mean, technically speaking, the exchanges and market makers do need to do some work to support the new token. So there's there is some cost to that for them. But beyond that, right, like the goal with this migration is to really leverage all the kind of headwinds that we're getting at Centrifuge and create more utility and more value for the CFG token. So I think not just thinking about what we've done in the past, but really trying to grow value for CFG is really the goal here. So it's not trying to reestablish just what we already have, but going much further beyond that and creating more liquidity for CFG, basically.
And that
Is
means
it
we
further-
are also having some conversations with new exchanges that we haven't previously had CFG listed on. And we're going into that in a pretty strong position now with the maker win announced and a lot of the tailwinds and exciting work that we have upcoming. We're sharing that confidentially with a lot of these exchanges, and they want to get in early and be a part of the future growth for CFG.
Okay, nice. Yeah, that's what I was going to ask next, and probably can't share too much information about that.
All right. Are there any more questions? Don't see any in the chat. All right. Well, the vote is still open until tomorrow, so there's still time. And I can see Ivan already posted the link in the chat. So it's an off-chain vote, which means you just need to go in, connect your wallet, click yes, no, or abstain, and nothing else. So there are no transaction fees when you vote in off-chain vote, and you don't need to specify the amount. You're using just the amount, the balance you have in your wallet when you vote. So yes, of course, Sam, you can share the link again. It's right here. So that's the link in the chat. So if there are no more questions here, then we will move on to the next point on the agenda, which is a treasury proposal from ADE. And we have the authors, Marcelo and Isaac, with us here. So would you like to talk about, introduce yourselves and talk a little bit about what this funding is for and yeah, the background for the proposal?
Sure. Good morning, everybody. Well, at least for us here in El Salvador. I'm going to share my screen real quick, if that's okay.
Go ahead, you should be able to do it.
Can you guys see my screen?
Yes, we can.
Thank you. So I'm pretty sure you guys have learned about a lot about us. So I'm gonna try to be as fast as I can with a quick 5-minute presentation, just to give you guys a little bit more clarity on our solution. And we can then probably focus more on some Q&As, which I'm sure you guys have some questions. It's both Isaac and I, and we are two of the operating co-founders for ADE, which stands for Activos Digitales Estandarizados. And basically, we are a developing digital asset service provider, and we want to help banks basically digitally transform their TradFi products into secure blockchain native digital assets. And this is key because El Salvador's law permits that. In fact, I'm sure you guys know, but El Salvador has been on the news a lot. I mean, Tether just opened, they're constructing their headquarters in El Salvador, and the president and the government really wants to like stand out within the blockchain ecosystem in today's world, right? And we are basically want to help the banks providing with a safe institutional grade tokenization infrastructure that will let these banks basically use blockchain technology to improve transaction capabilities for their clients and themselves, of course. And I mean, we don't want to stop in El Salvador. We do want to continue to work in Latin America. However, El Salvador, it's our core market for the next few years. And the market size, it's really big. There are around $6 billion in illiquid CDs in El Salvador right now. And as a little bit of context, and I'm sure you guys read this in the proposal, but CDs are the chosen financial product of savings for El Salvadorians. And this is something that, you know, it's huge, right? And we do want to capitalize this. I'm not able to share a lot of information, but from the market opportunity, at least the 6 billion, it's usually divided within 10 banks. And the banks that we have started working with, they hold approximately around 1 billion in CDs. And based on that, just like a quick, so you guys have a clarity of our projections. And again, we can answer more questions after. But after like our first year of operations, we're hoping to get 20% of their 1 billion in CDs, which is roughly around 200 mil. And I mean, that's like a conservative approach. If we're able to get more of that, we're thinking that we could potentially get 400 million within at least in the first 2 years. And we're hoping to get most of their CDs by years 3 or 5. And that's just with one bank. Obviously, we have started discussions with other banks, but we're trying to focus more on this is one of the biggest banks, and it's one that's pushing a lot of a digital transformation, which is why they're very interested in moving this way.
Also, just to add a little bit of context on that, El Salvador in the last 2 years passed a digital asset issuance law, which essentially sort of like scraps the sort of tokenization model via SPV, and hence sort of the term blockchain native digital assets, because what the government is essentially looking for is for assets to be minted directly on chain and not have asset representations, on chain. So Marcelo was mentioning CDs. We believe that CDs are also a very important asset for people's lives here. As he mentioned, it's the most popular savings product. But the current capabilities of people here in El Salvador with that asset are subpar, essentially, when you compare it to the things that can be done in the US or markets with more liquidity. So tokenization allows us to essentially, adapt a little bit more to the liquidity scarcity that's faced here in El Salvador. And well, I'll get to that with the next slide as well. So we're looking to tokenize certificates of deposit, right, as I mentioned. And at present, if someone wants to actually use their certificate of deposit for a transaction, it's a piece of paper. They have to turn it around and essentially sign off a total and irrevocable transfer of the full title. So within blockchain workflows, right, we can actually fragment parts of the value of that CD so they can use it more efficiently. It's also worth saying that surety bonds, which are also quite important for the country, have very little collateralization with CDs, and that leads also to higher fees and higher risk for insurance companies. And we believe that by offering clients this product with the banks, they can actually take their CD to another bank, which is a pain point actually currently in the market. If Marcelo or I buy a CD right now from any bank, usually the only bank that can give us a loan against the CD is the same issuing bank. And because of the liquidity crunch I was mentioning, the bank usually feels this as painful as an early withdrawal. So it leads to a very disincentivized sort of transaction, right? And anyways, so what we want to achieve with this tokenization is easier transferability, right? Allowing people also to sell like stripped fragments of the CD, because you have two different kinds of cash flows, right? You have a monthly cash flow that is the monthly interest rate of the instrument, and you have the principal, right? So we'd like to be able to allow people to not only sell those two different, cash flows, but also fragment them, right? And the word fragment is also a little bit key. It's more or less like a semantic thing, but banks obviously work in fiat, and fractionalizing something involves essentially rounding errors, right? Like whether you multiply or divide, it creates that sort of problem. So as we've been working on a prototype for a minimal proof of concept, we actually came upon this realization that a standard such as 1155 does bring us that conundrum. So we're looking potentially at ERC 3525, and our research on that is ongoing. Then the other challenge as well here in El Salvador is what is mentioned here, the bank integration. Most of the banks' tech stacks, right, are very old legacy core banking systems. We are working with some that still use AS400s with sort of like an RKG code base. Some of them use COBOL. And we can clearly see also right now within their efforts to improve their services with the retail-facing apps or online platforms, that they are migrating actually to new APIs. And that's also key for us because it can allow us to create the necessary infrastructure to take these institutions to a DeFi or to a regulated DeFi ecosystem. Essentially, that's more or less what we can do and what the potential we see with CDs. And why Centrifuge? Well, you see, you have a private data layer, and that's actually quite important for us or for the banks to actually respect or comply with the bank secrecy law, right? If a customer of the bank wants to take the CD from their institution to another one, the bank needs to actually be certain that there's a waiving of the secrecy peer-to-peer, and that is essentially part of the architecture of your private data layer. So we see that as a very good synergy. Then also, when we think about secondary market, right, we believe that we can sort of adapt our platform to your tokenization workflow with asynchronous vaults, and essentially have a Centrifuge native automated market maker for the trading of the CDT cash flows on your protocol or dApps. And we also think that we have strategic alignment essentially for your institutional expansion of cash equivalents, right? You were just mentioning US Treasuries, much like government treasury notes, right? Certificates deposits are also cash equivalent. So yeah, that's essentially our presentation.
Yeah, so more than happy to take.
Any questions? Yeah, exactly.
Could you just, before we go to the question, just talk about the amount requested and those milestones in the proposal, so people know that as well, please?
Sure. So it's basic. We're asking for 162,500, and that's basically what as Complex, Inowise is a Polish blockchain development company, and they're helping us, and that's basically what they quoted us. So we want to be very transparent on what our costs are. More than happy to share, and just FYI, this was not mentioned in the proposal, but we're more than happy to share, invoices and just for full transparency. The 162,000 is basically divided into two milestones. The first one is basically the development of the POC, and we were asking 45,000. And then the second milestone, it's basically the expansion of the POC into an MVP. And this is basically divided into three parts. The second milestone being again 45,000. Well, second milestone, part two, another 45,000, and then the third one is 29,000. Just basically, like I said, milestone two, just the MVP development, part one, part two, and part three.
Well, also just to provide a little bit of context as to what can make these things feasible in a blockchain protocol, right? We have to build essentially a series of middlewares within an interface layer, right? That can allow us to connect to core banking systems, right? And they also essentially integrate ourselves with the new API workflows that the banks are working on, right? So we envision this also as something that has to be embedded within the bank's existing mobile platforms or online portals, right? With their client-facing, infrastructure. That way, it's essentially easier to digest for the client that the security is being issued by the financial institution they bought it from, right? And that they are sort of handling, at least within a single organized portal, all of the transactions that might take place with that. So we are essentially coming up with an embedded wallet, blockchain wallet, so people can actually use these assets in the ways we described before, and essentially either trade or grant it as collateral for a surety bond or a loan with a different bank, and that would only be the start, essentially.
All right, thank you both. All right, let's open for the questions and hear what people think.
Not so much a question, just wanted to give you guys some additional context, obviously. So as an active contributor to the Centrifuge DAO, I've been working with Marcelo and Isak now for well over a year. I was the one who suggested Centrifuge, knowing that this is sort of an institutional grade RWA product and chain, and the way that it's positioning itself in the market. They especially love the private data layer, as Isak was saying, just because we could do some really important part of the work with that. In fact, a while back I had shared the interview that Lucas had done as part of the key pictures thing with Simon that was released some time ago, probably around when we were at the RWA Summit last October. John's had a couple calls. We're going to try now re-link up with him, and as well as I know that some other people, I've gotten Martin in the loop, so we're trying to kind of have some conversations with them to just further expand on the ideas, because this is just the first product of probably more to come in the future. So just wanted to share my excitement for finally getting to introduce them to the rest of the DAO and having everybody kind of look at this. I helped sort of put together the proposal. That it was in the 2 milestones, but knowing that, you know, the tranches can only be up to 50,000, I said we need to subdivide this to get the smaller payments and everything else. And really looking forward to maybe getting some help, you know, either from a brain perspective or even technical help, you know, from the team as this continues to develop. You know, I know that the team was very busy with doing the current shipping of the V3. And so this is another reason why they got InnoWise involved, just again, for some additional context, and really excited about trying to bring this to Centrifuge and driving TVL growth. And on top of that, one thing that they didn't get to talk about is that they are really well connected with the people who matter in El Salvador, including, for instance, I might mess up the title, they might have to correct me, but the Presidential Commissioner for Foreign Investment, who directly answers to President Bukele himself. And so hopefully at some point in the near future, I know I will be going down to El Salvador, and it'd be cool if maybe John or somebody from the Centrifuge team, you know, maybe in the months ahead gets to come down, meet the guys, and potentially see how we could expand the presence for Centrifuge, not only in El Salvador, but eventually broadly in Latin America as we continue to kind of see what, you know, Centrifuge takes off on its rocket ship here.
Thank you, Ryan.
Thank you, Ryan. Yes. So Ishwar is asking a question. What's the timeline for the POC? So the minimum prototype or working prototype that we are currently engaged in is going to be developed within a sandbox with a custody service provider. And it's essentially going to take hopefully 2 months. And after that, the next step is to present or showcase the functionalities to the regulators and essentially get licensed for those specific digital asset services, right? And you know, be able to integrate also external service providers required by law. There's a need of a certifier, for example, to be part of the workflow when these issuances happen. And that essentially is also something that can take a little bit more time. That's why we went for 2 months and not just 1.
But after that, the MVP development is going to take 4 to 5 months. So we're looking in total 6 to 7 months for both the POC and the MVP.
That means also that when integrating, you know, with a bank, right? That is essentially the timeline that InnoWise has estimated. So to be specific as well about InnoWise main expertise is actually open banking APIs, right? And essentially from what we've gathered about the tech stack of banks, right? That's more or less what they are estimating, right? Like conservatively.
Yeah. Maybe now I have to chip in because I cannot type in, but thank you for answering that question. But there is one more thing, because you said that there are a lot of people that are involved in between for the approvals and regulatory and everything. Have you listed out the amount of risks and opportunities? For example, Ryan already mentioned that you have good connections in El Salvador, which is a very good thing, but also the risks that can have an impact both on the proof of concept or having an MVP, and how did you or for example, or let me summarize, do you have a risk matrix or risk list of risks that are associated with the overall product, and how are you going to address that?
Yes, there are actually. So the risks of, you know, essentially not being able to meet deadlines or something like this, which are external factors to us, right? Involves also the bank's kind of like rolling release of their apps. They're essentially in a constant patching sort of process, and that can potentially delay us to some extent in different circumstances, right? So sometimes a new product get deprioritized essentially from their own IT department. So that's essentially one. There's also a lot of cybersecurity crimes that have been happening in El Salvador recently. Our ISP was hacked for a year. Like our largest internet service provider remained hacked for a year. And there's also essentially, some bank risk that has to be taken into consideration within the transactions in the secondary market as well. And we've been studying a little bit about Basel compliance, so we can be on the same page with the banks in this matter. And yes, I don't know if there's anything more specific that you'd like for us to discuss.
No, nothing in specific, but just the overall product that how are you managing the risks? And because of course, when you are dealing with the banks, I know there is a lot of scrutiny and everything that is related to whatever the products that you're offering or everything, or sometimes the regulatory approval or something that can also take a lot of time. So 2 months and 5 months seem to be a little bit, for me, not coming from that background to be optimistic, but again, you are the experts and you know what you're doing, so I leave it to you on that.
But just to be clear, it's going to take 6 months for the MVP to be developed. In parallel, of course, we are advancing with the banks, and I didn't mention this, but we've been talking with the banks for a while now. We've had a lot of discussions, and in fact, we were responsible for the banks to update their digital asset providers like requirements, and that took a lot of due diligence, like more than 4 months, just for them to update all of their requirements. So again, that's great feedback from their side, of course. Because after that, I mean, the due diligence part and on the discussions with the integrations and everything could take a little bit more time. But again, at least from a POC and MVP standpoint, it will be 6 months. And just again, a little bit of context on the bank itself. The bank has 2 million users. Just as context, El Salvador has 7 million people, so they do have a lot of users, and they're first envisioning the like ADE within their clients so that they're able to like transfer CDs, fragment them, etc. And overall, start adding more banks as well. So again, just some food for thought, I guess.
And also regarding risk mitigation, right? We are integrating essentially custody, a custody tech solution that is basically MPC. It's a mix of both MPC and cold storage. And at least on the cybersecurity risks, right, we are handling it that way. Also regarding the full scope of the law as well, it encapsulates as well cybersecurity standards, right, for the offering to retail clients, right? So we are essentially incorporating authenticators, right, into sort of like the workflow. And yes, sorry, more questions, yeah.
All right, yeah. Let's move on. I think we have more people who have questions, so let's make sure they get time to ask as well. Sam, go ahead, please.
Yeah, this is a two-part question. I think maybe the first part goes to Marcela and Ryan, and we might need other team members to chime in. But let's assume the POC works great and we scale it out to MVP. At that juncture, from the 6 months to 12-month period, what kind of a TVL can we expect? What kind of interest rates can we expect? What would be the take rate? And then the distribution of those gains between Centrifuge and ADE to kind of illustrate, okay, here's the 162.5K spend as the cost. What's the return on it?
So I can actually answer that as well. So if we think about the asset that we're tokenizing first, the CD, right? You have essentially a base from which to charge a fee, right? Or like, and you also have another, set of flows that can essentially allow you to collect fees, right? Like the yield or the monthly interest payments, right, can be essentially the source of collection for different fees, be it gas fees for your protocol or your DApp, and also for our services too, right? And what we're seeing is that there is a cyclicality as well to the expiration of CDs annually, right? Most of them expire and get renewed in March and September. So that doesn't mean that there are no CDs being, reissued within, between March and September on either side of the year. But you're talking about 20% essentially of CDs on those quarters, right? On both of those quarters. So we'd like to also approach that sort of like expiration dates, those expiration dates. And there's also another thing about the digital asset law, which regards the tax incentive. If the person's CD is larger than $25,000, it is currently subject to a capital gains tax. And if it's tokenized, essentially, we avoid those taxes for the customer, right? So that is essentially a rough kind of like description of the marketing strategy or sales strategy we have in mind.
So that's good in terms of the wins in your sales, but can we add some dollar signs next to that answer?
Sure. So if we think about current interest rates, actually that's also something that goes into the previous question about risk, right? As interest rates go down, the impact of fees on the capital gains, right, is larger. Essentially, sorry, let me see the question.
We have to be a little bit more concise, but just real quick, we're thinking that after we start working with the bank, where we're hoping to start by the end of the year, by the end of year one, we should have that 20%, basically.
I would like to
20%
hear.
of the 10 million users. Anyway, we don't need to dwell on this. We can take it async, but I think this would be helpful for everyone who's trying to support you to know. We can move on.
Thank you, Sam. I'm just curious to hear this from a Centrifuge BD perspective, like what they think about this this proposal.
From a business development perspective, like we're in the business of getting business on our platform, right? So I think that it's totally something we're interested in. I think the part that we need to pay attention to is like from a technical perspective, what is being spent and then what our technology can already support, and if there's any way for us to use internal resources for that. So I don't think Yaron is on the call anymore, but maybe we can address some of that async is like, we see the proposal. Is there anything that we could potentially support or that our technology can already support with some of the product innovations that we're putting in place now? That might make it smoother. So from a BD perspective, of course, if the 20% comes through, that's fantastic, right? I think it's more so from like a technical perspective, and what the money's being put towards.
That's interesting input. Yeah, Yaron is unfortunately not on the call anymore. Otherwise, it would have been good to hear his input as well. We still have time for one or two more quick questions, so keep the questions short and the answers precise as well, so we can make sure to cover them.
Yes.
Any other questions? Sam, you unmuted yourself. Is that a hint? Oh, all right. Okay, so no other.
I'll just say real quick, Orhan, for those of you who are going to be in town at the RWA Summit, tonight from 3:30 to 7:30, I'll be there too. So hopefully I can try and answer some of these questions. And Isak is working on a white paper that will probably have some more of the granular details to Sam's questions about, what the fees that could be earned, how many bips, what that means in terms of translating into potentially rev share for Centrifuge and so on and so forth.
Thank you, Ryan. sounds like there are some technical discussion around this as well that we probably could sort out. And a good opportunity to do that is in the forum post and in the proposal. So we can communicate that way there. So everyone gets to ask and get an answer.
I have a question around Ryan. If I understood correctly, you're representing Global Stake as Lucky Friday, and you're doing this pro bono, right? Do we need to think about sustainability in terms of in your incentive alignment here?
Yeah, sure. No, I can explain that a little bit. Yeah, so I hate the brand confusion. So those of you who know me as Lucky Friday, just to give you a really quick breakdown, Silvermine Capital, the VC fund that owns us, they started Lucky Friday Labs, which I often leave off. Labs is an incubator. Global Stake is sort of the institutional brand that we're using. It's the same SOC 2 certified hardware, bare metal that we run under the hood, so on and so forth. Nothing's changed in that regard. The ADE guys were so gracious as to offer equity in the project to Global Stake as part of the ROI from my time spent with the team, which we meet every single week, and so on and so forth. We want to, and I try to note some of this stuff too, like we are in the process of establishing a Salvadoran entity, because in order to be a service provider, as they're trying to grow out their digital asset, business, if you will, in the country, that's one of the contingencies, that you have to have sort of an operating entity. We are in the process of setting up a Cayman entity that's a holding company for other entities that will then be spread out across the globe. So we'll have one in El Salvador so that we can actually provide the infrastructure that's required, including an RPC, for instance, endpoint to communicate. We already run an RPC for free for Centrifuge, just as fans and someone who wants to support the protocol. So that's kind of the quick rundown of the connection and why I'm so involved with this. And of course, just being a Centrifuge fanboy and active contributor, I was the one that wanted to really kind of get them involved with building on this network and with all of you.
Okay, great. That's helpful to know that there is an incentive which will ensure sustainability for you. Is there any other questions coming up?
Yes, so I think there's two. So there is demand for CDs outside of El Salvador. Essentially, if we look at sort of the next stops are two other dollarized economies, being Panama and Ecuador. And eventually, as these things pick up, right, we do foresee other Central American countries, but we would rather first focus on dollarized economies, essentially, because it makes it easier to get funding from outside, right? There's no currency risk also when handling Basel requirements. It's much simpler. And the other one is, does it include a security audit? My understanding is that it does. So yeah.
All right. Thank you guys for presenting and being efficient, and thank you for all the questions. I think we are going towards the end, and I got a question asking for a dad joke. I came unprepared today. Oh God. I have one, but they might be a little inappropriate for this call, so I'll save them for another time. Yeah, I can't think of any one that are presentable at this time. Turn off recording and tell the Kate. Go ahead. Buy me some time here, Kate.
Oh, I'm like, I've started looking into dad jokes. I stayed up all night wondering where the sun went, and then it dawned on me. It was terrible. Okay, surely you can come back from that.
Oh God. Well, yeah, luckily you don't set the bar too high, but that's still no, just kidding. There's no such thing as a bad dad joke. But yeah, maybe I should put up a treasury proposal to allocate some time for having good dad jokes for all our calls and make them a little bit more, spread the word.
Top of Reddit, bad joke, dad joke.
All
I
right.
think it's like Trump wants Canada. He mistook Putin for Putin.
Good. That's good.
All
Thank
right.
you.
I will turn off the recording now. There might be one coming after this one. So hang around if you want the full extent of this governance call. But thank you for coming, everyone. It was a pleasure. Thank you guys for presenting, and for Jeroen and Baji in the beginning as well. And we'll see you in the next one.
Thanks, everyone. Thanks.